friends, family, villains, my fellow grasshoppers. Today I'm going to talk about something that I get asked all the time. Check it out. Here in my Telegram channel where I share all my trades for free, I literally just post all my analysis. I posted this today and people will notice right here. They say, Nick, you're using a 1-to-2, maybe almost a 1-to-3 risk reward ratio, when in fact, most of the time for basically every trade I use 1-to-1 risk to reward ratios. However, on this one, I've risked $30,000 to make a potential $80,000. People are asking a lot of questions. We get a lot of people asking me in the comments all the time, Nick, you're using 1-to-1 risk reward ratios, but if you're closing the losses early, right? Because that's what I do most of the time. I get out of the trades a little bit early if they lose, and I hold them to the profit target if I'm right. Since you're closing the losses early, Nick, why not just freaking use a 1-to-2 risk reward ratio or 1-to-3 risk reward ratio? And as usual, a lot of people like to deny the fact that there's a lot of nuance in trading. There's a lot of subtleties and there's a lot of discretion and price action discernment that actually go into that intuitive decision as to what exactly to do. I'm going to break down in this video why I shared this trade in Telegram this morning and why it had a greater than 1-to-1 risk reward ratio. And I'm also show you how it's basically the same thing as using higher risk reward ratios, but you're more flexible if you use 1-to-1. The link's in the description for this Telegram channel. It's just a free channel where I share all my trades, analysis, everything just for free, live every single day. So you can check out this free Telegram channel, link in the description of the pinned comment. Let's go to a chart here. Let's break down the actual trade that I'm in right now. So in my private Discord server, I shared this trade this morning, March 19th, 2026. We're on Thursday, March 19th. So this is this morning at 7 a.m. I posted this right here, USD Canadian dollar. I put a stop loss above the zone, target below. And then I posted this right here. I'm short on USD Canadian dollar with a $30,000 risk. And then in a 3-minute audio message, I explained the entire context behind this. Okay. Then price started to go into more profit. It was in a $10,000 profit really quickly. And then now, as of right before this video, where I screenshotted this, put it in Telegram, $27,000 profit. Okay, cool. So I'm in this trade right here and I'm using greater than a 1-to-1 risk reward ratio. Now, first, I want to show you how I'd normally set up this trade, right? Just under normal circumstances. I would go short at the resistance zone because all I do is I buy and sell at support resistance zones in the daily chart. It's literally all I do. So I'd sell at the resistance zone, okay? And then what I would do when I'm selling at the resistance zone, I put a target at the previous low, and then I put a stop loss above the previous high. So where's this previous low down here? It's this guy right here. So that low. So this was the target, so I'll put the target just before that. And then the stop loss above the zone up there at a 1-to-1 risk reward ratio. And then what I will oftentimes try to do is if price does in fact go against me, I have a little bit of space to manage the trade. Okay, so if price starts going against me and starts breaking above this high, and then we pull back, we make another higher low, and we start doing some stuff like this, that's probably going to be a trade that breaks out and go towards the stop loss so I can get out earlier, right? Maybe like halfway to the stop, 1/3 of the way to the stop, oftentimes even like around break even or even a small profit, even though it didn't work out, just because if my entries are right there inside the zone at the optimal point on when it's going to break or bounce, it allows me to just be able to get a really good entry so I can manage the trade better. However, every now and then we have a trading opportunity like this, where price comes deep into a super clearly defined resistance zone. We've got that point there, this point here, that deep point here, this last point here, we fell away. Now we've popped right back up. We're here into the zone. And I was able to get my entry there this morning. Now, again, I want you to look at two things here. This is the 1-to-1 risk reward ratio risk structure, right? And remember, we're just selling at the damn resistance zone. We're not doing anything wild here. We're selling at resistance. It's not complicated. But instead of me putting that wide stop loss, I've put the same sort of target, right? Same kind of target I'd have, but I've elected to put the stop loss just above this zone. And instead of risking like 50 to 75,000, I'm only risking 30K. So if I was risking, for example, $75,000 on this, and I closed it about 1/3 of the way to the stop loss, that'd be about 25K. So in this case, I'm just risking 30K. It's about 1/3, a little more than 1/3 of what the risk would be had I just set a 1-to-1 risk reward ratio and risked 75,000. Now, the reason I've elected to do this is because of something very simple right here. The main idea here is that price is at the exact point where it is make it or break it. Meaning, if I enter a little bit lower down here into this zone, I'm going to use a different short position tool just to kind of show you this for an example. If I were to enter, say, lower into this zone, right, like somewhere like down here, the stop loss, there has to be some room for it, okay? So if the stop loss is at the same location, which is really clear far above the zone, the take profit has to be all the way down here just to get 1-to-1 risk reward ratios. And keep in mind, you could do the same thing, but with a better entry in the same stop. Now your profit target's very, very close. And this is just by waiting for a better entry. And so if I'm doing this, I can't be putting the stop losses too close if I'm entering like midway or lower into the zone like that, just because the price needs some room to be able to go if it wants to run to the previous highs. So if it wants to run deeper into the zone and do something like that, the stop loss has to be far enough away so that you don't get pinned out on stupid stuff like that. That is the beauty and the flexibility and the dynamic way to manage things with 1-to-1 risk reward ratio. So what happens if you're blessed by the Forex gods and they're able to give you a really, really good entry, meaning you just waited for the price to go really deep into a zone, right? Literally to the extremes of where the highs were at. If you're able to do that, and you know that you're likely going to close the trade the moment it breaks above that zone because it would no longer be valid, in that case, there's nothing wrong with either setting an alert there and getting out of the trade if price pops into that location before your stop loss, or you can just set the damn stop loss right above that region. In my case, it's like a 1 to 2.5 or 1 to almost 3 risk reward ratio. It's just what it happens to be, right? I'm risking $30K for about $80,000 of profit. So almost a 1 to 3 risk reward ratio. In this case, I know that I'd probably be closing it anyway in there. And if it does go all the way up into there, then I can just get out of the trade early and it'll be a loss. So a lot of people, they're unforgiving whenever it comes to breaking quote unquote rules in trading. They're unforgiving. They do not want to see anything as dynamic or nuanced at all. They want to see it as black and white. You got to follow this exact thing, do the same thing over and over and over again. But you're massively underestimating the complexity of the world we live in and the complexity of trading in general, even if you keep it simple, by thinking that way. You have to be able to open your mind up to be a little bit more discretionary, a little bit more intuitive, learn from all the applied experience, and that will give you the wisdom to be able to decide, okay, should I close a trade early? Should I enter this trade at all? Should I enter right here or should I wait for price to go a little bit further into the zone? Should I risk the high end of my average risk or should I risk on the low end? So for me, I risk like $25,000 to $75,000 per trade with an average of $50,000 risk per trade right now. And when I'm doing that, as long as I make a little bit more when I'm right versus what I lose when I'm wrong, all the stats and metrics play out. On this exact account that I've been trading on for the past, I think it's been like 6 months now. It's almost been 6 months. I have the P&L right here. It's actually more now with the current trades. But $350,000 deposit. I've made $273,000 in realized profits before swaps and commissions just on this one account in just 6 months. Okay? That is pretty insanely lucrative, and it only works because I just make more when I'm right versus when I lose when I'm wrong. So whenever somebody comes to you and says, you know what, if you're using 1-to-1 risk reward ratios, but you're just closing early before it gets to the stop, remember, it's not a bad thing to use a higher risk reward ratio. The thing is it depends on the actual trading setup. It depends on the quality of that trade, and it depends on whether or not you're entering in the zone at a place where price could just push a little bit deeper into the zone before going into profit. There's nothing wrong with doing it anyway. I prefer 1-to-1 risk reward ratios, and almost all my trades are 1-to-1 risk reward ratios because structuring it that way gives me the flexibility and also the ability to use my dynamic trade management skills as a result of trading for the past decade and having made millions of dollars in Forex, crypto, and stocks combined. I'm able to use that discretionary judgment and that subjective judgment to help decide, okay, I can cut this trade here at break even. I can cut it at small profit, small loss, halfway to the stop, whatever it is. And it allows you to do that when you're using 1-to-1 risk reward ratios. A lot of people, they get caught in this trap of using high risk to reward ratios, taking loss after loss after loss because your average win rate's going to be below 50%, most likely if you're using anything above a 1-to-1 on a long enough time horizon. Unless, of course, this is where your edge comes in, unless you're managing the trades dynamically, getting the hell out of losing trades a little earlier and holding the winning trades a little bit longer, ideally to your 1-to-1 risk reward take profit. And so if you're doing that over and over, that is a more flexible, dynamic way to manage it. And that teaches you the skill set of trading, which is using your brain and giving 2% of a shit to start deciding when you should get out of the trade early instead of letting a stop loss decide. I use a stop loss really just in the case of emergencies. I use it just in the case of like price just breaks the zone, goes really far past it, hits the stop, and I lose. Most of the time, though, the fact the stop is far enough, it gives me plenty of room. It gives me that mental freedom and that psychological flexibility to be able to manage that trade if it does, in fact, start going into loss. So that is what I've opted to do with USD Canadian dollar right here. She's still deciding what she wants to do. She's going kind of sideways here at this zone along my entry. There was a trade I had on NZD USD yesterday where I closed right here in profit just before it got to that previous low right there. So we went down here, we went into profit. I elected to close. I'll actually show you that closure right here. This was just a sell off the resistance zone. So you can see $283,000 profit, so a little bit more. Plus we've got the open profit on the, what is it, USD CAD trade I'm in right now. But that was a $20,000 profit. And I closed that 2/3 of the way to the profit target just because it was Wednesday. You get triple swap fees on Wednesday, and we had a quick move into profit in less than a day. I think this was like 8 hours, I think, from when I entered it. So it was a very, very quick trade. I wanted to go ahead and protect the capital and protect from all the swap fees, the changeover, the rollovers, the potential gaps and high spreads and things like that. I just wanted to be out of the trade. So I ended up closing there yesterday, and that was a nice trade. And then before that, we had a partial loss on NZD/USD because remember, all I do is I buy at support and sell at resistance. On the daily chart, I had sold at the resistance zone here. Sold at the resistance zone, and as it started going against me, my stop loss was like up in this region, right? So my entry would have been right there at the resistance zone. Again, all this is in the free Telegram channel, link in the description and pinned comment. You can go check it out for yourself. Sold right here, stop above the zone, target at 1-to-1 risk reward ratio, 30K risk. As it started breaking above the zone and heading above it, I thought that all these little higher lows price was painting right here, I thought that this was going to send price higher and we're going to have a breakout past the zone. So I liquidated my short position when price started cracking these highs and all these recent highs here. I liquidated it right there thinking it was probably going to break out above the zone, thinking it would probably go to the stop loss. And guess what? I was wrong, but that's okay because on this I lost $10,000 sure. The next morning though, when I woke up, right, it came back down, went sideways, and started breaking down really quickly. I ended up selling as it started breaking all the recent lows after all these higher lows were coming up. I sold, put my stop above the zone, target below at a 1-to-1 risk reward ratio, 30K risk for a 30K profit. Price ended up pulling back a little bit before then running down into profit, and I was able to get out at the same session yesterday, just in the course of, I think it was like 8 hours, 8, 9, 10 hours, something like that. A very nice, easy trade, and it was just a simple sell at a daily resistance zone. Yes, I know we're on the 1 hour chart, but use your head. It's a daily resistance zone. I post all this in Telegram. I post them with charts and analysis and everything in there for free every single day. It's an area on the daily chart where prices bounced over and over and over. And it's not hard to find these zones. If you have vision and you have the eyesight and you have 2% of a brain that you can use, you just look at the places on the chart where prices bounced multiple times over and over pretty consistently. And whenever price gets to those zones, right, you just have an alert there. When price gets to those zones, you buy if it's at support, you sell if it's at resistance on the daily chart. You put a stop loss past the zone, and you put a target at a 1-to-1 risk reward ratio. And if you're wrong and it goes against you, try to get out of the trade early. If you're right and price starts going into profit, then try to hold it to the profit target. And when you get setups where price is literally at the make it or break it point, kind of like, honestly, NZD/USD was perfect yesterday. Again, I thought that it had plenty of opportunities to bounce downwards and was failing. I thought there were no more sellers, so I closed there, and I stand by my decision to close this sell early. However, imagine if you opted to say, you know what, this is the make it or break it point. If price literally just breaks above this zone here, I'll be out. So what you can do is you could enter a sell right there, provided it's a really good entry. You can risk a smaller amount than what 1 unit of risk for you would normally be. Because again, like let's say you're using like a normal stop loss would be up here way past the zone. You're risking, let's say $100. If you put the stop loss closer like that and you only risk $50 or $40 or $30, it's going to be the same basic loss if it goes against you, but you just have a more clearly defined entry at the exact point where price is deepest in the zone, where it is either going to break past the zone and invalidate very quickly, or it'll bounce into profit quickly. And if you're going to do that, just use a higher risk to reward. So like 1 to 2, usually that would work perfectly fine, but just set the profit target wherever you would normally set it if you were using a 1-to-1 risk reward ratio with a stop nice and clear past the zone. If any of this does not make sense, just follow my damn live trades for free every day on my Telegram channel. I've been running that channel for 8 years and I've been trading for 10 years. So I started it back in 2018, the summer of 2018, 2 years into my trading journal, or 2 years into my trading journey. When I got profitable, I started posting all my trades in here just as a way for me to just track my own progress. And it's grown to like 50,000 members since then over the course of the past, 8 years that I've been running this. This summer, it'll be 8 years. It's crazy, but I post it all in here so that you can follow along. You can see this stuff that I apply every single day right there in the Telegram channel. I love you all. I hope this video was helpful. If you did hit the like button on this video, that helps out my channel a lot. And I really appreciate that. Doing a little experiment here to see if these kinds of videos breaking down live charts and live trades work really well. So if you did hit the like button, that helps out a lot. And yeah, comment below if you like. And I'll see you in the next video. I hope the video helps.